Welcome to The Explainer. You know that feeling when you look at an insurance plan and your eyes just glaze over? We've all been there. Today, we're going to cut through all that noise and demystify one specific plan, the LIC NAV Jeevan Shree 912. We'll do it by breaking down what a real advisor would actually tell you so you can see exactly what's on the table. And that's the big question, isn't it? How do you take all those dense, frankly confusing details and turn them into a story that actually makes sense? Well, that is our mission today. We're going to slice through that complexity and build a clear picture of what this plan is, how it works, and who it's really for. Let's get started. So here's our game plan. We'll start with where our info is coming from. Then we'll decode the plan itself. After that, we'll look at your options, run through the eligibility checklist, and wrap up with the most important things to remember. Nice and simple. Now, to make this as real-world as possible, we're not just pulling from some generic brochure. Nope. We are looking at the actual materials from an authorized LIC advisor. This is the kind of information you would probably see if you were looking into this yourself. So the advisor here is Gaurav Gautam. And, we're not going to dissect his entire resume, but the main point is this. It's always smart to know the source of your financial advice. Okay, now let's get into the product itself. All right, we know our source, so let's get to the main event, Plan 912. We're going to break down what this thing actually is, piece by piece. Okay, that is a mouthful, so let's translate it into plain English. Limited premium, that just means you only pay premiums for a fixed number of years, not for the entire life of the policy. Non-participating, this is a big one. It means your returns are guaranteed and predictable, but you don't share in LIC's profits. And endowment? Well, think of that as a 2-for-1 deal. It's a savings plan that also has life insurance baked right in. So, how does this all work for you, the person holding the policy? This next part is all about the choices you get to make and the features that are already built into the plan. First things first, you get to choose how long you'll be paying premiums. This is that limited premium idea in action. So instead of paying for, say, 20 years, you could be done in as little as 6, or you could spread it out over 12. It's all about giving you the flexibility to match the payments to your own financial rhythm. Now, what's really interesting here isn't just the list itself, it's how these features are all bundled together. This plan is kind of like a Swiss Army knife for your finances. It's a savings tool with guaranteed additions, it's a protection tool with life insurance, and it's even a liquidity tool, since you can take out a loan against it after just 1 year. This whole package is really designed for someone who wants to cover a few different financial bases with one single product. Of course, with any financial product, there are rules. You can't just sign up for anything. So, who is this plan actually built for? Let's take a look at the eligibility checklist. This table gives us the essential numbers. A couple of things jump right out. First, that minimum entry age, just 30 days old. That tells you right away that this plan is often used as a long-term savings plan for a child. And second, the minimum amount you can insure for, the sum assured, is 5 lakh rupees. Now, you see no limit on the maximum, but remember that little asterisk. It's always subject to underwriting, which basically means what you can get depends on your personal financial situation. Okay, we've seen all the good stuff, the benefits, but what about the fine print? Because understanding the limitations is every bit as important. Let's dig into the key conditions you absolutely need to know. We mentioned this term before, but it is so important it's worth hitting again. Non-participating. This is the core trade-off of the plan. You are giving up the potential for higher variable bonuses that are tied to the company's profits. In exchange, you get certainty. Your returns are predictable, and they are guaranteed right from day one. Here's a tiny detail, but it's straight from the fine print. 90 days. For policies bought offline, there's a 90-day waiting period. What that means is if death happens due to illness within those first 3 months, the full benefit isn't paid out. It's a small detail, but a really vital one to be aware of. So let's just pull it all together with the final takeaways. First, remember, no profit-based bonuses. Second, that 90-day waiting period is a thing. Third, you can buy it online or offline. Fourth, you might get some incentives for choosing a higher sum assured. And finally, and this is the most important one, this explainer is a guide. Always consult the official brochure for the complete official picture. So, if you had to boil down the entire idea of Plan 912 into one sentence, this is it. This plan is designed for someone who puts a higher value on stability than on speculation. You are actively choosing a path of predictable, guaranteed savings and protection, instead of chasing market returns that could be higher, but are also a lot riskier. And that leaves us with one final question, and this one is for you to think about. For your financial future, for your own goals, what's more valuable? Is it the safety that comes from predictability, or is it the possibility that comes with potential? There is no right or wrong answer here, but knowing your own preference, that's the key to choosing the right path for you. Thanks for joining us on The Explainer.